Alright, so I'm going to click this test drive so we could analyze the QuickBooks account of the client. Alright, I'll just duplicate the tab for easier navigation. There. Alright, so what we're looking at right now in the dashboard are tasks that are suggested by QuickBooks for the accountant of Craig to complete. We have here the overdue for customers who were not able to pay their invoices on time. So QuickBooks has a way of a tool that that would help the client to send a templated email. So if you go here, there's a templated email reminding the customer to pay now their invoices. On the other hand, we also have the client has also overdue bills, so it's a reminder for the client to make payments also to their vendors. And there's also one bill due next week. So if the client is making cash budget or projections to make payments, so this is one way that has to be included in the schedule. And last but not the least, the categorization of the 33 transactions. So if we see this type of task, it means that there are transactions, bank transactions, which were not categorized yet, and it needs to be categorized. So if it has been categorized, meaning once we categorize it, it will now flow through the financials of the client. So let's go now. If either we click here or we click the bank transactions, it's the same. So let me see what's happening here. There. It's not working. Which is there. So in here, my suggestion is the accountant of the client, or the accountant of the client to categorize the transactions, but be wary of making the categorization of the either of the income or expenses, because sometimes not all suggestions of QuickBooks is correct. So the accountant should be prudent enough to analyze the transactions being suggested by QuickBooks. He or she should not blindly just click add, and then or match rather, just click match because hey, QuickBooks has already made this suggestion, so I would match this because this is already a suggestion. Sometimes we really have, not we, but of course we are the accountant should really be conscientious enough to check if the suggestions given by QuickBooks are correct. Now, in terms of this one, there are uncategorized transactions. The accountant would also have to click this one and then make an analysis like this one. Make an analysis as to identify who is since this is an income, identify who are the customers. Like, hey, we have here a rental, so we have to identify here, hopefully, customer. There's already a created account, but if there's none, then the client has to create one under a rental. All right, as you can see, an customer, there's none. But here you can see, let me see, a renter, there's none. See this one, books by Bessie as a vendor. Something that has to be checked. So there's no a rental. So we have to create, and then we have to identify what's the what do you call this? What's the nature? It says here A1 rental backhoe deposit refund. And let's see the other one. A rental backhoe rental. So this is other income. Categorize expense A1 rental. An expense. This is also an expense spent. So we're renting. So this one we have to look for the vendor. We have to look for the vendor. sorry. So we have to create, like client has to create an account for this specific vendor, because this one it looks like um we are renting from this vendor. As you can see in here, it says here AR backhoe rental. So we're renting backhoe from this vendor. And then we have here uncategorized income. Most likely there's a refund. So this is a contra expense account. So this is not really an income, but this is more of like this one. This is an expense. So this is an uncategorized expense, but a contra account for this what they call this vendor. So I said my piece regarding this one. The accountant should be prudent enough into making to be prudent enough into understanding the transaction. Like this one, we have noted that for AR rental, we are, since the transaction of the client is rather the business, the nature of business is landscaping. So most likely they're using backhoe and they are renting this equipment. So there is a rental expense to be recorded in the books. However, there is a refund, so we'll not say this is an categorized income. So this is a contra expense account. All right. So these are some of the things that has to be considered by the accountant. Similar with this one, like they have the client has to be sure what is this amount that has to be deposited. Where does this come from what income, right? So it's just not much, but the much here is deposit. But where does it come from? Is it gaining this amount from service that has been performed? All right. And then what else? This one, like an uncategorized expense. If it's an expense, how come it's not spent? So is this a refund also? So this is something that has to be checked by the accountant. All right. Now we're good with this, assuming everything has been done. Now let me just uh, perform one operation. Assuming that the cost of the accountant just click this one without without making an analysis. All right, inadvertently it has been clicked. So now for the financials, assuming it has to be submitted to the accountant for the review, so the accountant would go here to the standard reports, and then let's go to profit and loss analysis. Profit and loss. And for easier checking, allow me to download this. Wait, sorry. Allow me to export this to Excel for easier, easier review of the transaction. All right. I'm just analyzing that one. So this one, if you will notice, coming from the income statement, what the first thing that you have to look into is look for unusual transactions. And I have noticed here the uncategorized expense, which has been inadvertently added by the accountant. So if we're looking into this one, we really have to ask what's the right category of this one. So we have to go back, assuming we're the one booking or the transactions, or we inadvertently added that one. So we really have to make corrections and properly categorize to which as expense account this falls under. So that's my observation for this one. And also looking into this one, looking through the expenses, I notice here, like first here, these are the income, um, landscaping. We have here the materials, the labor, and then pest control services, sales of product income, meaning they're selling products. It's not just purely services, design and landscaping. There's also a product being sold, and then there's services in here. So this is a generic service. So my suggestion here for easier analysis, QuickBooks as a way of defining the chart of accounts in a more organized way. When I say defining, it's there is QuickBooks has a functionality wherein they can assign numbers here. Like for instance, if we're going to just organize the chart of accounts, the 1000 would fall under all assets. Well, it would fall under all. If the number starts with 1000, it would be on all current assets. That will fall under cash, inventory, things like that. And then for 2000, this would fall under all fixed assets. All right. And then 3000 for liabilities, and then 4000 for income, and then 5000 for expenses. All right, so if I am the if I'm the accountant of Craig, what I'll do for easier or I would put here as cogs, because there's cogs, and then 6000 for expenses. If I am the accountant and I would be the one to, or if I'm the accountant, or yeah, accountant of Craig, I would make this type of labeling. So it would be easier for me to also understand um, the the profitability of each of the streams of income of the of the business. Like for, like, let's focus here with 4000. We have here the design. We have design income. Then we have here the landscaping. And then landscaping has been further subdivided into job materials. And then we have labor. So I assume we have labor, and then we have here pest control services. Okay. And then we have here sales of product income. And then we have here services, a generic services, I do not know. So here, since we have identified 4000 to be used as income, we can play around with the numbering, or like here it should be 4000, for landscaping should be 4001. And then since we have here the job materials that would fall under landscaping, this could be 4001.1. And then the labor is also under landscaping here, it should be 4001.2. Alright, so this is under income. And then here, as you notice, there's cost of goods sold. And just looking into this one, there's the word product income. This cost of goods sold would fall under cost of product income, right? So let's go here, 4000, 4002, and then we have here 4003, the cost of um, sale of product income. Now, as I had indicated 5000 for COGS here, I would put it here, like, just to be side by side this one. It would be under 5,003 for cost of goods sold of COGS for product. Alright? So that's how I'll do it. Now, since I notice here that there are items here which has been misclassified to expenses, which should not be, because it's not really an expense, but this is a cost of sales coming from this income. What I would do is that job materials, it's here. I'll just put this up. So there, I'll play around with the numbers, and then I'll put here fountains, no, and then because I see here decks and patios, just move it here. 401.2, okay, 401.3, 401. Or is my numbering correct? This is job materials. This should be 4001.1, 401.1.1, like that. 1.2 there, because that would fall under. Alright, so decks and patios, we have plants and soil, sprinklers, Now, in terms of cogs, this one, I would put it under 4001.1 for fountains. Like, so for, no, 5, 5001.1 for fountains, 5001.2 for decks and patios. So, this is how I'm going, how am I doing it for. All right. So I'll be revising. I'm not totally going to revise the chart of accounts, but it's more of me adding this number, so it will be easier, because when you prepare schedule C, all right, so you'll be able to, you have, it will be easier for you to pick up in the financials what are those relating to design income, what are those relating to landscaping, to pest control services, to sale of product income. And this service is so generic. It has to be identified whether they should fall under either design income or landscaping income. This will going to really confuse the reader. What does this mean? What services does this mean? Because looking into the main activity of the business, it's design and landscaping services. So it makes sense that there's a design income, landscaping services income. I agree with the pest control services. But services per se, as just services, this has to be reclassified for a more define um, more defined. The transaction will be more defined in the financials. Okay, so be it will not be open for more questions. All right, just in case somebody will have to read it. So that's how I see into this financials. And if there are any uncategorized expense or uncategorized income, then this has to be resolved and disposed of. So there will be proper definition of all the transactions here in the profit and loss. Because in the preparation of either client schedule C in his 1040 or 1120S, the expenses should be properly defined. All right. Next thing, if it's okay if the client is preparing the financials in his schedule C, this is okay. But if this client has an 1120S, there is a need to put an additional account title for payroll and even payroll taxes, because the payroll could be a compensation for the officer or the owner, because it's a requirement by the IRS that the owner should compensate himself as a reasonable compensation for the business that he's that he puts up. So if there's no payroll or for compensation for the officer, and that has been reported in the IRS, and the business really making money, it is going to raise a red flag to the IRS. So it's best, as early as now. Good thing it's still an income, but I don't know what will happen once the cash has been classified, if it will still be an income. But if it's still an income, there's a need to have a reasonable compensation to be included here in the financials. So if it's a loss, it's okay if there's none. But if there's an income, then it's good to have it included here. And of course, the corresponding payroll tax has to be paid as well. So this is for profit and loss. And since we have here, if you will notice, we have here materials. So there is a corollary inventory that I would assume being kept in the books, right? So let's go to the uh, balance sheet, and um, investigate what are the suggestions that we could give. So we have in here checking and savings there, and then accounts receivable. So these are from the customers. They had performed services, yet the customers has not yet paid their invoices. We have here undeposited funds. This is something that has to be checked. Are there any funds that did not push through to the savings account? Collections made, but we're not checks that has not been deposited. So this is something that needs to be what do you call this? Needs to be checked. Another is there is a truck, but there's no depreciation. So we have to tell the client if there's a truck, there must be a depreciation expense to be recorded. Either if this client is waiting for the depreciation expense coming from the computation in the tax form, that's okay. Just that the client has to prepare an account title for accumulated depreciation and depreciation expense. Just be ready for that one. Now here, accounts payable, that means there we have to pay, we have an accounts due to our vendors, the MasterCard, board equalization payable, and loans payable, loans and notes payable. All right, this loan and notes payable, first we have to go here to opening balance equity. We have to see, because this is an abnormal balance, we have to analyze it. Now if you will look into this one, I'll say that this 5,000 is an initial investment of the owner. This journal entry, this is the cost of the equipment, because I'm going to duplicate this because it will take a while. This is the cost of the equipment, so I would say that this is okay. So it's directly being credited to the owner's account, like truck and opening balance equity. That's okay. The only thing that is unusual is the two entries here. This pertains to loans payable, all right, and notes payable, if you will recall here. So I don't think this should be recorded because there's no cash infusion. Because normally if you receive cash or if there's a loans that the company takes, that amount should be taken, the cash should go into the company or to the entity's bank account. However, it does not go there, and this is something that needs to be reversed. All right, and once this is reversed, everything, the amount here will be normalized. Now these numbers, these are the infusion also by the owner, putting this putting inventory for example, for pump, sprinkler. I mentioned earlier that since we are here, since there is separate cogs we have created for this one, I would like to recommend that in terms of keeping the inventory balances. I know it's lumped in QuickBooks, but it's best if in terms also of properly identifying the inventory, this should also be I would say properly labeled in inventory. For instance, if we go here to inventory, because here in the inventory, what we'll see here is the running balance of the account. But if we go deeper into what constitutes sprinkler heads, like that, so there's no delineation. But if we will going to, if we're going to, like this one, products and services, for rock fountain, for to make edit, so we have here inventory asset account. If we're going to like I mentioned earlier, we have to put, if we're going to tweak the chart of accounts, we have to put numbering. So we could add here, we could add here the description, like if the inventory would fall under 1,000, current asset could be 1,000, 2 for okay, could be 1, 2 for inventory of fountains. Like, would put here inventory fountains. But we have to put here 1, 2.1 and then 1, 2.2 for decks and patios. Reason behind it, it's because we have to cancel. For instance, this one, fountains. So it's correct. So we could have, but then here, in terms of putting this one, it's just plain inventory asset. But if we put here, be more specific, putting it under inventory fountain. So there would be matching. So for instance, I have to close this. So this one is fountains because there is a category for fountains. But what about, I don't know if there's a category for pumps. There's no pumps, but there's something that they have to also look into, because, or if pumps would fall under sprinklers, that's okay. This one, if pumps would fall under sprinklers, and we make edit, then this sign would go for sprinklers, right? And then we have the inventory asset. There's already a description. We could put here, like, you know, like if it's inventory asset account, but in terms of description, like inventory pump, right? Or make some sort of a sub account, so it will be easier. So things like that. So it will be easier to track the inventory of each of the item. But in terms of QuickBooks, it will all be summed up when the reporting happens. It's easier, so we would know when at the end of the period if there's an inventory count has to be made, and they'll be able to identify if there are pilferages along the way. I mean, this is just a one-man team client, but of course, when when the business gets bigger and he or she has a partner, so at least there's transparency also. So that's how I see on how I will going to make a recommendation and review this client's financials. This deposited funds, this has to be checked also. So this is what I mentioned already, to put depreciation. So these loans and notes has to be reversed. Eventually, when this reversed, this will be normalized. Alright, so this is how I view it. I mentioned already about balance sheet and income statement, as well as transactions, on how to do the categorization and things to consider when they do the categorization. So alright, so I hope this helps. Thank you so much.